I don't know why September is the worst month of the year for stocks. It just seems like it always is. As a matter of fact, since I believe it's 1928 through last year, September had actually lost 1% on average. Of course, this hasn't been so much of an average market. So this is Steve Wolf, and I'm trying to recap what happened in September of this year. And I can tell you, September returns, they were just downright awful. 1% wouldn't be so bad, but the Dow is down about, and the S&P were both down around 9% just for the month. And the NASDAQ was down around 10.5% or so for the month, which means that for the year at the end of September, the S&P was down about 25%, the Dow was down about 21%, and the NASDAQ was down a whopping 33%. So needless to say, September was not a great month. But September is not always the worst month that there is out there. There are times when September is the best month, but boy, true to form, this particular September was not very good. So let me tell you what the culprits are. But before I do that, I want to put in a quick disclaimer, is that whatever is being said here is for informational purposes only, and it's not meant to be a recommendation. But before you buy or sell anything related to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation. All right, so what were the culprits in the month of September? One, and I'm sounding a little bit like a broken record these days, but it's interest rates. The Federal Reserve just seems to want to break the economy, and they're going to keep raising rates no matter what. So last month, they raised it another 0.75% or 75 basis points. And they're projecting that they want the anticipated target rate to be around 4.4% by the end of 2022, and it's currently in that 3 to 3.25% range. So the Fed just seems hell-bent on raising interest rates almost no matter what happens. I kind of wish that they would maybe do one more raise and then stop for a while, pause for a while. Let's see what happens, because generally speaking, almost always, you don't get an immediate reaction to what happens with the Fed or with monetary policy. It takes a while. It takes a few months. And we're starting to see just the very start of some things starting to slow. And that's what the Fed wants. They want inflation down. Inflation has been pretty stubborn, but they want that down. So I would hope that they'll wait a little bit. I'm not sure that they will. And why is that so important? I mean, why are higher rates bad? I mean, it's really pretty simple. It's because everything you want to finance is more expensive. You can see what's going on in the housing market right now. The housing market is slowing down. Not only are some people not wanting to buy because it costs them more because of the rate, but some people don't want to sell because they don't think they're getting enough money. So rising rates are meant to cool the economy. I think that's starting to happen. I hope that the Fed understands that and takes a good look at that before they just keep raising and raising and raising. So what's another culprit? And this was actually pretty big last month. Credit Suisse is a Swiss bank, and it's one of the major banks in the world. And there were some rumors out there last month, last month, that Credit Suisse was going to go down. They were going to go out of business. And what I look at to see if the whole market believes that is I look at something called credit default swaps. And I'm going to say it was last Friday, or maybe it was last Thursday. I think it was last Friday, September 30th. I looked at the credit default swaps, and for Credit Suisse, it was at 250. That was the spread. Now, the spread ordinarily for most companies, really, that wouldn't be such a high number. But for a bank, it is a little bit high. And the reason that people are thinking about this is there was kind of a rumor going around that they couldn't meet some of their obligations, that Credit Suisse couldn't. I don't believe that that's true. I don't think that certainly hasn't happened yet. But they have lost money 3 months in a row, or 3 quarters in a row, not just 3 months in a row, but 3 quarters in a row. And they were also part of the banks that took Archegos Financial as part of what they dealt with. And Archegos is like this fund that had a huge collapse. And it, of course, affected any of the banks that were associated with them. And apparently it has affected Credit Suisse worse than any of the others. So when I look at the credit swap from last week, it was at 250. And today, Credit Suisse is at 303. The bigger the swap, The worst people think that these guys can pay their debts. Interestingly, all the other banks are down. So a lot of people were saying, oh my God, there's going to be another 2007, 2008, where there was contagion with all the banks. But it doesn't look like the market is really saying that. Matter of fact, it seems to me that it's really focused on one bank, and that's Credit Suisse. And a lot of people are saying that, well, that's an issue. But I will tell you that an analyst at Citibank said, after fielding inquiries wondering about the contagion impact, they said that they, quote, understand the nature of the people's concerns, but the current situation is night and day from 2007, as the balance sheets are fundamentally different in terms of capital and liquidity, and we struggle to see something systemic. Because back then, there was a systemic risk to the system. Right now, no one really sees that, so it's possible Credit Suisse could default, although I still think it's a little bit out there, but it's possible. But that's not the same thing as what happened in 2007. So I think from that perspective, I'm not nearly as worried. Interestingly, today is October the 4th, I believe it is. And the last couple of days in the market's done pretty well. And I think that if there was a real issue, if people thought that Credit Suisse was going under, I don't think that the stock market would be up right now. So the stock market has been down up until very recently. The yields have come down a little bit versus where they were just last month. And that's another reason why the stock market is up. So in the last month or so, you couldn't hide anywhere. Whether you were in stocks or bonds, you were losing money. And if my phone is any indication, and sometimes it is, when clients are calling, I get an idea of what's going on. And over the last week or so, I was getting a lot of phone calls of people who were really concerned, like, get me out concerned. I can't handle the stress anymore. That usually comes at a bottom or near a bottom of a market. Rarely do I hear that when things are going well. And, the noise is always the loudest when things are the worst. And this last week, I can tell you that up till the end of the month, it was pretty bad, and the noise was pretty loud. So, just from maybe a guess here and just my own personal belief is that we were just way too negative at the end of last quarter. And I'm not saying that things are going to get great right away. It could take a while. I mean, October has generally been a good month. I think this could be a little bit of a rebound month. It started that way. We'll see what happens. But I don't really think that we're that far from the bottom. I wouldn't be shocked again if we still were testing out the bottom of where we just were. If you really look at it from June till now, we've kind of been going sideways. We really haven't gone up or down. We've gone down just slightly. So from June, July, August, September, it really has been kind of a sideways move. I do believe that at some point in the not too distant future, that rates will start slowing down, if not stopping on the upside. I think the Federal Reserve will start seeing some results that say, hey, we've done our job, things are cooling, let's pause a little bit. And I think when that happens, I think you're going to see the market finally stabilize. So we'll see what happens in October. I'll be back here in November to recap what's going on in October, what has gone on in October. Until then, everybody, happy investing.